Welcome to TradeTheMBI.com. This is John. This report is for the 18th. Happy birthday to Isabella. Well, continuation, just as we expected, but this is an interesting one where we have, instead of a straight line up of our MBI magenta, we've already got a little bending right here, which, like we talked about, any pivot back below that 25 is a concern. Actually, I even look at 25.50 range as being negative, and you can also see the white MBI rising. So while it's still positive, what I watch out for is this effect right here that we talked about when this last happened. We broke the 38% before, didn't close above it like we did this time, but we immediately spidered, and that expresses weakness when that happens. We still don't have a steel reset from the standpoint of short-term buyers, already pretty elevated within this setup. I kind of draw this line from the beginning of the year. Just represents the percent angle, just point difference between where we started the year and where we're currently at. I just thought it was fun to kind of look at that prospect. But this is still, generally from a positive standpoint, shake out everything. Warning down here from the extremes. We're almost red lighting it. So this is, strong algo activity. Good chance it can get filled back in on any weakness, and that's exactly what I would be looking for, is a move back to that 23% on weakness, and it can happen fast. Most of your down days in these kind of situations are going to be quick and volatile. Let's flip on to the NASDAQ. Much different. You see the solid rise of that MBI magenta straight up. So, but also above 43. So again, you're in one of these areas where we're below 50%, pivot back down below, and that's going to be problematic, particularly if white continues. So this is where we start to look at those. You also don't have green crossovers, so NASDAQ's more exposed clearly to a retracement move in this particular setup, coming off of the strong turnaround buy configuration that took place right off the crossover. It's just accelerated quite quickly, and the problem with that being is you don't have that great of price appreciation with the amount of move that you're seeing in the indicator, which just means that there's a lot of counterparty action. Euro bouncing back up to its peak. Everyone thinks that it's super delicious, that the euro is, put that in scale again, making a big move. Sustainability doesn't appear to be that great, though. We have cyan breaking over, but you still have magenta leading, so until that pivots back down, it's still in an upswing with it. From a gold standpoint, we had filled positive extremes back above the 50%, and still looking at a pretty soft setup, but you do have magenta over and the potential of green rising, and that steel coming from the bottom. You see, this is where if the market had steel coming from this direction, you'd be looking at really potential nice explosive energy to the upside with it. And oil from its standpoint too, pretty good sized jump back up over the 100 mark. And again, it's the realization that, we filled in those positive extremes that we've mentioned from before, but there's no change in the supply side of things. And if the economy continues, then potentially there just isn't going to be enough, and that's going to create greater upside pressure. Again, treasury yields, as this drops, yields are rising, and that's the pressure that is going to fight against the Fed. And this is where you hear about, this negative yield curve. You got rates at 0.25%, inflation running at 8%, and that's a big differential. Parking your money is a big loser at this particular stage, and that forces people into the market for that appreciation, particularly if they feel things have faded enough that they're getting a bargain. And in some cases, you don't even have a choice in that case. They just have to put the money somewhere. Bitcoin, from its standpoint, is still struggling. This is a strong move with magenta coming over, and we haven't seen that spike yet. So we could have a potential big pump, except for the fact we ended up with this rejection of green and cyan on DOC with orange rising. That's a fairly weak position, and that's from the daily standpoint. Intraday, you can see it's just traded sideways across. ETH, good movement on those buys, the fill backs, turnaround, everything's nice and clean with that. I really enjoy watching the ETH with the paint bars, and that's been very effective. And there was the continuation rise from the 50K chart. I'll be adding back in the strategies because I had the difficulties with the workspaces, getting that all squared away. And then from a 5K standpoint, this was the later rally that took place. We had some soft periods within it. And when we get those, usually expect to move to the 50%, but it turned around even well before that. So there was pretty good strength, but you can see post-market coming back to fill those in as that last late day surge got positive extremes all through it. And there were a bunch that took place going all the way back here. So that's what I would be looking at, is that 43.72 range. All in all, really good intraday behaviors. The ups and downs have been pretty darn clean for the most part, which means that we're not seeing anything erratic, which I think is an important element, because there were some days there where we were getting just a lot of choppy back and forth. These have all been pretty clean trend runs, and that's just an indication that the algos detect a weakness, drive it to a certain point, then the algo realizes counterparty says, hey, they've extended too far, and attacks, and you just keep rinsing and repeating, and that's pretty much how the market's been behaving these last many years. So all good stuff. As always, though, I will update you on the Skype chat. Trade well. Talk to you later.